Just started a brand new back testing session that I'm going to be back testing the beginning of 2023. The pretty much the first 6 months of 2023 I'm going to be back testing because this is like one of the last windows of time that I have not yet back tested. So really nice trade to start off this session. So going into I took two trades today, one loss, one win. And going into the day, I was bearish. Now, why am I bearish? Well, the bigger time frame is clearly in a sell model. We are continuing to sell off here. We've got sell side here, and we're pretty much playing out this AMD. So we had accumulation here, manipulation. Where did we manipulate into? This daily fair value gap here. So we manipulate, sweep the highs, daily fair value gap holds bearish, and we start to sell off. We get a daily change in the state here, daily change in the state here, and then this large daily bullish fair value gap gets ran through. So at this point in time, I am extremely bearish on the bigger time frame. I want to see lower towards sell side. So going into this day on the 4 hour, I notice that we are right here going into the day, and I'm looking at this internal high, and I'm not really interested in anything until that gets taken, right? So on ES, this internal high here had already been taken going into market open. So you can see right here, 3 a.m. ends up sweeping out the high. So we've got an internal bearish SMT at this high. Neither asset is taking out this high. So on NQ, that market open, we're right here. No, hang on. A little bit further. Right here at market open. And I can see that this bearish imbalance is kind of starting to get ran through to the upside. So I'm expecting us to go here before we get a move lower, but I still ended up taking an early entry that was it was low-key buns, to be honest. My first entry was pretty bad. But basically my thought process behind the first entry was the market opened right here at 8:30. We immediately sell off, but notice when we sell off, we don't sweep any. Hang on, let me take the executions off right quick. When we sell off, we don't sweep any major internal swing low. We're just generating more sell side liquidity. I mean, we take a few lows here, but we don't ever even take out the pre-market low. And then London low over here is still intact. So we're just continuing to generate sell side liquidity. We get bought back up on NQ, and we end up sweeping out this high and putting in a small bearish SMT. So if you look here, ES at market open did not take out this high. So this is the high that NQ takes out. This is ES on the rebalance. ES does not take out this high. NQ does. So bearish SMT gets put in. Now I'm looking for the reaction of that bearish SMT. So what is the reaction of the bearish SMT? A 30-second fair value gap. Sorry, this is pretty glitchy. A 30-second fair value gap gets ran through, right? So market opens, sells off, generates sell side liquidity, gets bought back up here. Internal bearish SMT. The reaction of the SMT is a 30-second inverse fair value gap. I take my short here. My stop is at the high, and I'm targeting this low here, and I'm going to move stop to break even at this low. Now, why is this a bad entry? In my opinion, it's not just hindsight that I'm saying it's bad. It's not a great trade because there's nothing on the 1 minute. Like the 30-second is just a very low time frame, and if you go to the 1 minute, as you can see, nothing happens here. Like this is where I take my entry. We have no 1 minute inverse fair value gap. There's no 1 minute change in the state because that would be here. It's just a rebalance on the 1 minute to like OTE of this price leg before continuing higher. Now, once we come up on here, once I get stopped and the market gets bought up and we actually end up sweeping out this high, we end up sweeping out London high, we put in an SMT with ES. ES does not sweep London high. So if I go to ES, as you can see, this is the move higher. This is the high that NQ takes out. ES does not take it. Another bearish SMT. Now at this point in time, I'm wanting to see what is the reaction of this SMT. And keep in mind, we're in a bigger time frame. Like I already said, we're in a bigger time frame sell model and this bigger time frame 4 for value gap. And ES has taken out this intermediate high, which is a high inside of him in a balance. And we have all of these sell side draws lower. So I'm already extremely bearish. So when I see this bearish SMT get put in here, after I get stopped out initially, then I'm wanting to see the reaction of this SMT, right? So when SMT gets put in, I'm waiting for the reaction. We end up just straight up dumping with this SMT. We dump straight through the 2 minute imbalance right here. So the 2 minute gets closed. Like I'm waiting for the highest time frame for value gap in this price leg to get an inverse basically. Notice there's no 3 minute, there's no 5 minute. The highest time frame for value gap on this manipulation price leg is a 2 minute. So when the 2 minute candle, which is this, closes all the way down here and inverses its gap, that is when I take my second entry. Now, obviously, the only logical place at this point for my stop is all the way up here, which is what I did. I took my initial entry there, and then I had my stop all the way at this high here, and I was planning on scaling, like when if the market rebalanced here and then we respected this again, I was going to scale into this position and then take my full position off at the low, basically. But we never come back up to the inverse. We get like a little bit of a rebalance here to this 1 minute, and then the market just starts to dump. Now, initially I was and by the way, I moved my stop to break even once this internal low was taken. Now, I was initially going to take my full position off at this low because that's just what I do. But then I just had to look at the bigger time frame, and I decided I'm going to let this run all the way because look at the bigger time frame here. Like, there's so much reason to move lower here. In my opinion, I don't see any reason to take a position off at this internal low because of the bigger time frame. We've got double SMTs because ES has taken out the intermediate high in the 4-hour gap. Both NQ and ES are holding this 4-hour. We've got the internal SMT at market open. We are now getting a bigger, like the move that I traded, like the initial move towards London low is bigger time frame displacement. So we've got like the 30-second or the 30-minute change in the state here. The 30-minute fair value gap holds bearish overall. Notice we never close above the 30-minute fair value gap. So we're just wicking. Huge wick. SMT gets put in. We're clearly showing a unwillingness to go higher. Then we start to sell off heavy. And then look at the 5-minute time frame. There's all of this generated sell side. All of this here. There's no reason to close the trade here. We've got London. We've got like whatever this is, like late Asia session lows, equal lows here. We've got another low here. We've got Asia session low here. We've got previous day's low here. Now, what else gave me the conviction that we were going all the way to previous day's low? Standard deviation. So what is standard deviation? Standard deviation is a measurement of the last manipulation leg, meaning it has to sweep some form of liquidity and or form an SMT, which is what manipulation is. So you measure the last manipulation leg from the high to the low, and then 2 to 2.5 standard deviation should be in line with an already existent sell side drawn liquidity. And when it is, that means that it gives you more conviction that we're in a sell model, because it's no coincidence that the last move higher that sweeps liquidity on NQ, which is this entire price leg here, if I measure from the top to the bottom, like I said, 2 to 2.5 should be in line with an already existent draw. 2 to 2.5 standard deviation is absolutely perfectly in line with previous day's low. So when I measure this out, I'm not looking at this and saying like, oh, that's just random. Like, no, the reason that 2 to 2.5 is in line with this is because this is a sell model. This is a beautiful, clean sell model. So I end up holding this trade all the way to the low. This is a beautiful market maker sell model here, and it's not only all of this internal low resistance sell side that's making me hold this. It's more so the bigger time frame, because the bigger time frame is so bearish. Look at this. This is models inside of models. This is another market maker sell model. Remember, like I said in the beginning of the recap, we have this AMD here. We've got accumulation, manipulation. We're now distributing. And now on the bigger time frame, after this consolidation phase on the bigger time frame, we're now ready to move again. How do I know that we're ready to move again? Because we've now had internal manipulation on the bigger time frame and the bigger time frame displacement. And once again, what was the bigger time frame displacement that gave me a lot of conviction? The 30-minute. The 30-minute never closes above this gap. We get the 30-minute change in the state here. We get this huge manipulation wick here, clearly showing, like I said, hesitation to go higher. I have no reason to take the trade off at this low. I just move my stop to break even, and I leave this running all the way. And as you can see, if I bring up the executions, here they are. As you can see, cash out at the low, and then the 1 minute time frame. This was where I took my entry. Okay, remember, I take my entry as soon as this 2 minute candle closes. So this was the 2 minute candle. This is 1 minute chart, but this is the 2 minute candle closes. Here I take my entry. Stop is all the way at the high, but when I see us hold this fair value gap and we start to sell off, once this internal low here gets taken, this is where I move my stop to break even. My entry is here. Market comes up, holds the gap bearish, and then we just continue to dump all the way down to previous day's low, which has now just been taken out.